Namaskar and welcome to the ninth part of this fundamental analysis course. In the last lecture, we talked about retained earnings, and after that, we were talking about liabilities. As we had seen, there are two parts to liabilities: short-term liabilities and long-term liabilities. We were talking about long-term liabilities. In long-term liabilities, the main thing that you have to check is long-term debt. According to Warren Buffett, liquor and leverage in excess is extremely dangerous. So if any company has a lot of debt, then it is a red flag. This is why it is important to do deep analysis on the company's debt. Today we are going to do just that. Let us assume that there are two companies, Company A and Company B. Company A has long-term debt of rupees 100 crores. Company B has long-term debt of rupees 1000 crores. So, can you tell which company has debt in excess of its capacity? Simply looking at the amount of debt is not enough to judge whether it is too much debt or not. We will need to compare the company's debt to its equity, its profit, the size of its operations, and others. Only after that will we get the full picture and understand whether the debt burden is too much for the company or not. Now, we are analyzing the financial statements of ICICI Securities. But as we had seen, ICICI Securities does not have any long-term debt. This is a very good thing. But in order to teach you debt analysis, we will have to choose a company which has at least some amount of debt. So, for the purpose of debt analysis, we will consider the balance sheet of Jet Airways. As you can see here, Jet Airways has long-term debt of rupees 5085 crores. All the figures mentioned here are in lakhs. We have converted into crores for your benefit. So, to check whether the long-term debt of rupees 5085 crores on Jet Airways is too much or acceptable, we will check the company's debt-to-equity ratio. The formula of debt-to-equity ratio is debt divided by shareholders' equity. While taking the debt amount in the debt-to-equity ratio, you can either take both short-term debt and long-term debt, or you can take just the long-term debt. For clarity in analysis, you should calculate the debt-to-equity ratio in both ways. So, the debt-to-equity ratio for Jet Airways is long-term debt, that is 5085 crores, divided by the shareholders' equity. As you can see, the shareholders' equity for Jet Airways is in negative. If any figure in the financial statement is mentioned within brackets, then that means the figure is in negative. So here we can see that the Jet Airways shareholders' equity is in negative. It is negative 7139 crores. The first thing that you will have to check is why the shareholders' equity is in negative. For that, you will have to check note number 19. You will have to check what the amount of retained earnings is, what possible reasons there are for which both the company's retained earnings and the shareholders' equity are negative. So, after checking note number 19, we see that the reason why the company's retained earnings are negative is that the company is functioning at a loss. Because of this reason, the company's total shareholders' equity has also become negative. This is a very bad thing. So here we see that the Jet Airways shareholders' equity is negative and the company has long-term debt amounting to rupees 5085 crores. This means the amount of debt burden on the company is far too much. This is the reason why Jet Airways has come so close to bankruptcy. So the things that you have to analyze in order to come to a conclusion about the company are very basic and simple. As you can see here, the Jet Airways shareholders' equity has been negative for the last 3 years. The main reason for this is the losses faced by the company. We can understand the situation of the company from here. Apart from the bad situation that the company is in, the huge debt burden on the company is adding to the problems. While analyzing the debt-to-equity ratio of any company, you will need to check that the debt-to-equity ratio should be less than 1. In simple words, the company's shareholders' equity should be larger than the company's debt. If the company's debt is larger than the shareholders' equity, then you will need to check why this is so. Also check whether the company will be able to repay its debt immediately or not. So, repeating again, while analyzing the debt, to check whether the amount is debt more or less, you will have to look at the debt-to-equity ratio. And you will also need to check whether the company's debt is lesser than its shareholders' equity or not. If the company's debt is lower than the shareholders' equity, then fine. But if the company's debt is higher than the shareholders' equity, then you should be alert and stay away. You should also compare the company's debt with the amount of profit earned. Here, the long-term debt of Jet Airways is rupees 5085 crores and the loss amount is rupees 636 crores. From here, it is clear that the company will face a lot of problems while repaying its debt. And currently, this is the situation. The company's total debt should be such that it will be possible to repay the entire amount with the profit earned in 1 or 2 years. This means if the debt of any company is rupees 500 crores and the profit earned in 1 year is close to rupees 500 crores, then we don't need to think much. So, in this way, to check whether a company's debt is more or less, you will have to check two main things. The first is to check the debt-to-equity ratio and the second is to compare the company's profit and its debt. So, by doing these two things, you can easily analyze a company's debt. There are two components in the non-current liabilities of ICICI Securities: other non-current liabilities and long-term provisions. In the first two videos that we had made on balance sheets, the ones which we have asked you to watch, we have covered the meanings of these two terms. There is no requirement for detailed analysis of other non-current liabilities and long-term provisions. The only thing to do is to check in the notes what is included in other long-term liabilities and in long-term provisions. It is enough to just check them. You don't need to do detailed analysis on them. After that, we come to current liabilities. The important component in current liabilities is short-term borrowings or short-term debt. ICICI Securities has 672 crores of short-term debt. You will have to check whether the company has enough cash or bank balance with which it can repay its short-term debt immediately. In the asset side, you will find cash and bank balances under current assets. As we can see here, the company has cash and bank balance worth 1,497 crores. So the company can repay its short-term borrowings easily. The simplest way of analyzing short-term borrowings is to compare it with the company's cash and bank balances. You will have to see whether the amount of cash and bank balances is more than the amount of short-term borrowing or not. If the company's cash and bank balances are more than the short-term debt, then it is a good thing. If this is not the case, then you will have to see how else the company can repay its short-term borrowings. Here, for ICICI Securities, short-term borrowings is no big deal. This is because it can use its cash and bank balances to repay the short-term debt easily. There are three more components in current liabilities: trade payables, other current liabilities, and short-term provisions. The meaning of these terms are explained in those two videos. All you need to do is go to notes and check what all is included in trade payables, other current liabilities, and short-term provisions. You will just have to go through them once. There is no requirement for detailed analysis, but you should know what they include. So, here we complete our analysis of the liabilities side. After this, the asset side is left. There are many important things in the asset side. We will cover those in the next part. Sometimes companies hide certain facts from investors. These things can be revealed if you analyze the assets properly. In the next part, we will talk about that. Here we complete the 9th part of fundamental analysis. We hope that you have liked the video.